Hey, it's Mack with PriceActionTradingSystem.com, and it's Tuesday. It's December the 15th. This will be our chart lesson for the day. And before I get started, I want to say this because I get so many questions on it, and people get really worked up about their chart because they can't make it look like mine, and they get concerned if it's 6,500 volume or 6,000 volume or 5,500 volume. And then I have some other people that you know say they like the tick charts better. Why did I switch from those over to the volume? And I'll be honest with you, you can't tell hardly any difference whatsoever between the 6500 and the 2000 tick chart these days. There's relatively no difference in them. They're almost identical. And then there's not a whole lot of difference between a 6500 volume and a 5500 volume. There might be a few there's going to be a few less bars at 5500, or actually there's going to be a few more bars at 5500. Wait, am I getting this right? I'm sorry. Let me think about that for a second. Yeah, if we go to 5500, you're going to get a few more bars, and you're also going to get hopefully some smaller bars. But I mean, it's a very there's just not much difference in them, I guess is what I'm getting at. The main key to this is if you can read a price chart and you understand what the price chart's telling you, they're all going to three going to tell you the same thing, or all four or five if you slight difference in the size. And you're never going to make your chart look exactly like mine. Make sure you understand that tick charts and volume charts are counting the bars based either the count of the ticks or the count of the volume. And time-based charts, you just go for 5 minutes, and when or whatever the time limit of the bar is, I should clarify that. If you're doing a 5 minute chart, then each bar is 5 minutes, and once 5 minutes is up, it starts creating another bar. Well, the reason we like tick or volume charts over time-based charts is because tick and volume charts show you a lot more of the details in the price action. And we're price action readers. We're reading the chart, so we need to see those details. So it really helps us. But outside of that, there's just not that much difference between a 2000 tick or a 6500 volume. They're basically identical, and that's why at one time the CME had changed the way the ticks were counted, and it kind of screwed up our tick charts. And so the quick easy fix was we found a volume chart that looks the same, and that's where we came up with the 6500. But occasionally the volatility will get a little higher or a little slower, and we might need to adjust it just a little. But it doesn't change the chart or what it says. It just might I might just change it for a comfort reason, but it's not that big a deal. Um, so don't I guess the whole point of this is don't get so caught up in your chart not looking like mine, because it's not going to look like mine. And I wouldn't be too concerned between 6500 and 5500 volume. If I change, I'll tell you. And if you want to change with me, that's great. But every time I do this, I regret it because I'll get 25 emails. Why'd you change? What's the reason? I have to try to explain it again. And I know that nobody is trying to create that extra work for me, but it just does. So hopefully, if you're watching, that clarifies it for you, and you'll understand it's not that big a deal when we change slightly, go from a 6,000 to a 6,500 or a 6,500 to even a 5,500. There's very, very little difference. If we go to 5,500, the bars are only they're creating every 5,500 volume instead of every 65. So there's going to be more bars at 5,500. So if we go to 6,500, we'll get a few less bars. Um, and the bars, the one thing at 5,500 though, the bars may be slightly smaller. And that was why we were experimenting with it, because some of these bars are so big, they're a lot bigger than 2 points. So it makes it really hard to follow the 2 point rule. So outside of that, it doesn't really change anything. You still get your swing points and your swing lows, your swing highs are all still going to happen at the same place. You just may not get as many bars. So hope that's clear, and didn't mean to get off on a tangent, but I just thought it was worth, because I get a lot of questions about it, and rather than try to explain it over and over to everybody, I just thought I'd throw it out here on the video, and that way maybe it answers the question for everybody. at the same time. So hope that makes sense, but it's not a big deal. So don't sweat it over the tick chart or volume chart. Find the one you like and go with it. And if I change, I'll tell you. And if you want to change, you can. And if you don't, it's no big deal. It doesn't really change a whole lot. So, but let's talk about the chart today. Not near as many trades today, but it was very, it's a nice easy trend with some great second entries on the way up. Then we kind of went flat, and then you kind of had a range to trade, and then we got another little trend that worked up here. Notice this is a two-tiered channel working up. We got a break here and a correction, and then we ran to a new high, and then we just kind of, you know, we're trending down here, but it's kind of more of a weak sideways downward trend. We actually had a nice little trend down here, but for the most part, we're just going sideways here. It was a good trading day, though. It was pretty straightforward, pretty basic, fairly simple to spot things. A couple of nice second entries longs here on the way up. Early on, I wasn't sure if this was a spike in channel with a early breakdown here. But I believe this was a two-tier channel. We got the break and a move to a new high, and then we corrected after that. So we actually had a correction here. So maybe there's, so you probably could have seen it both ways, and it didn't really change a whole lot other than you had to kind of wonder what was going to happen when we got to here. I kept thinking we were going to get a bounce, but we just were going sideways, and then we broke through. And I figured we would try to at least attempt a retest here. It looked like it was going to fail, but then we went higher. This is just a range. This is a smaller short-term range across here, and you get a big failed break, a nice chance to enter. It's a little bit aggressive, but we'll talk about that when we get to it. So let me back out a little more here and move over to the left-hand side of the chart, and let's talk about the trades. Notice here that we got this. You could basically treat that as a double top, but we got a new high there. You pull back, first entry, pull back. There's a second entry. That's not a great signal bar, but notice this. There's a little swing down here, and so this made a new low. So you got a little failed second. You actually have a little failed second entry long here, but I think it's too early to try to go short right there. I don't think you want to go for a short because we don't have a break of the trend line yet. Even if this is the trend line, there's no break of it yet. So we're just thinking long at this point. So, but notice what happens. This is two legs up, but it's really just one leg with two swings in it. And then you get one attempt to go lower, a second attempt to go lower. So you could, this is basically a triple bottom, a failed second entry short. Notice that there's one tick lower there before it turns up. A lot of reasons to think going long right there. So I like that one for long. And even though that's not a perfect signal bar, you've got all the other reasons to be thinking long. We're going to at least test this high probably, and this thing just takes off. And you really could have almost treated this one like a failed second entry short because this is basically a double bottom here, even that, and so you could almost treat, but it's so close to the high, and you got to go long right at the high. So I'd just skip that one and wait for a better opportunity. And then guess what? You get two legs back to the midline. There's actually a little short-term trend line right there. Notice you get a close outside, a move to a new low, and notice all those matching. You kind of got a little support across there, and you get a little failed break lower. So that's a second entry long, a little failed break out of congestion. A nice bullish bar. Just put your stop right there at the top of that when it closes, and off it goes. And that's these two trades were both great trades. This one you called a runner, and you could have taken the next ride up. We turned down off the top side, and that's how I found this line. It wasn't real clear where the low was here, but you get your angle off these top couple of swings here. You really could get them off those bars, and you drag it down, and it fits wherever you put it. So, and it actually, early on, I was looking at it maybe even being there. It fits there, but I believe it's a two-tiered channel. I think it's just like that right there, and that's your midline. Move that maybe a little lower. But anyway, so that's a second entry long, then it moves to a new high, then it pulls back. First entry, pull back, and another second entry long, right off the EMA, right off the the midline, and notice this. This is almost a perfect repeat pattern of that right there. You're going sideways, you get the little dip down, and then it turns up. Just go along there. It's a repeat pattern. It's a second entry long. Um, it's a bounce off the EMA, bounce off the midline. Doesn't quite get back to the EMA, but it's close enough. And this is a pretty strong trend. It's a spike in a channel, at least, at the very least, if not a two-tiered channel, and off it goes again. Then notice what happens. You've got a new low here, so the count's over. You get a first entry short, pull back, and you get a failed second entry short there. But to enter, and it bounces right off the EMA, but to enter here, you got to go long at the very high of the day after a big move up, a little piece away from the EMA. It's a little risky, so I'm going to mark that one green. It did work, but I don't recommend taking that trade unless you want to be real aggressive. I mean, the better entries are down here, and you should have probably caught a runner off either one of these, and maybe even this one, depending on how you entered it. With that bar being red, you might have let it break up and used a limit order. If you did, you probably caught a runner there. So, and then we start working down. I really don't think you want to take any longs yet. You at least want to follow the rules. You want to get a break, like right here in a new low. But notice what happens. It overshoots it first, and that's usually your clue that you get a break. And sometimes you don't get a new low after that, but we did here. We overshot. We overshot the trend channel, and we come up, and so that leads us to a break. It pulls back. You got a double bottom here and a little failed break lower after you've had a break and a new. I like going long there, looking for at least to pull back to the EMA. That's kind of what happens. It pulls back. There's a second entry long there counting off this low side, and we count it a little different when we're counting off the opposite side. And I know I'll probably get a dozen messages because I brought this up, but I've been talking with another trader, and he just didn't understand why this was considered a second entry. I probably should have named it something else, but all these years I called it that. So when I wrote the manual, I called it that anyway, not thinking about how it's a little bit harder to describe. But when you're counting off the opposite side, the first leg up is your first entry, then you get the correction, and you got to make a lower high, and generally you want to see a lower low, but you definitely want to see a lower high. And so when it made the lower high here and then broke higher, that's your second leg up or your second entry. And that's really all two legs are, is a second entry. So so there is a second entry long there, but I don't really like it because it's right into the EMA. We're starting to go sideways. I think you're better off to wait on a little better entry. So I didn't mark that one. It probably could be green, but I'm not even going to mark. I just don't like that signal bar. But hopefully you understand why that's a second entry. And another thing, I think what was confusing this other trader was we didn't really get a lower high here. We just started getting matching highs that went across there, all the same equal height. And you can treat that like a correction, and that's what was throwing him off. So make sure you understand that. You want to see a little lower high here to count that as a second entry, counting from here. In other words, that's your first entry, the first leg up, your pullback. So this is your second leg up or your second entry. And that's why, looking back on it, I wish I'd have named it something different because it works a little different than counting with the trend. But that's neither here nor there. It's done. But hopefully you understand that. And but if it just started making matching high bars across there, that you can consider that a correction because it's multiple bars that stopped going higher. In other words, what happens here is we stop going higher and we get a little correction. But if you start getting multiple bars that go across with the same height, then you've stopped moving higher and you're getting a correction even though it's not backing up a whole lot. So hopefully that makes sense. But this is the actual entry, and I'm not going to mark that one. But that is a second entry long. It is a double test. There's some reasons. I mean, I probably should be green, but let's just mark it green because there's some reasons to want to take that trade. I just tell you, I didn't like it. So, but there's reasons to like it. And then you basically make a double top here. But I didn't like that one because you got this trend line working up, and this is probably a little steeper than that. I mean, I didn't like going short here but I didn't like it going long either, but it could be green. But you get a break here. First, look at that pullback. First entry, pullback second entry, and look where it bounces. It bounces right off that support again. It's a nice bullish reversal bar. I like going long right there on that second entry. And that bounce off the support. And then you get a failed second entry short there. But it's so close to those. Look how we're finding resistance there and all those stems. And there's probably enough room to get out here, but I don't think you want to risk that one. We're just kind of going sideways, and there's a lot of doji stacked up. So just wait and see what happens. And guess what? We turn up and we turn down right off. I don't like that bar, but we turn down right off the resistance area, and then we go back again. So that's a little double test, and then it turns down and gives you this big bearish bar. I like that one. Go short. You might have waited on it to break and use a limit order, but if you miss that, look what you end up missing out on. So, just use a stop there because there's enough room to get out before you get back down to these lows. And this is really supposed to be right there. I think I moved it up because it got one more touch right there than it did before. So you could have it either place. It's basically the same thing. And this turns out to be a surprisingly good trade. But now look what happens. You got a failed break out of this larger channel here. And look at this big bearish bar. This is what I love this because this fools, you're going to trap a lot of weak traders that they saw this coming down, they missed it, and they say, I'm next, and then all of a sudden they see this big bearish bar and they say, oh, this thing's fixing to sell off, I'm going short. Not understanding what's going on here, that they're going to probably, at the very least, it's going to probably pull back and test this support and probably the EMA before it goes lower. So you definitely don't want to get in way away from the EMA down here, no matter how bearish that looks. So when it ticks one tick lower and turns up instantly, I'm going long there. It's a little bit aggressive, but if you catch one of these, a lot of times you can ride it all the way to the top. And sometimes you might even get a measured move like this right here from earlier in the day. You see that a lot. We didn't get that today, but we could have. And that's how you catch those trades. There's a second entry right here counting off the low, but it's right into the EMA, and look how it hesitates before it pushes through. You're better off to wait on the failed second entry short. And notice you got a new low. You're pulling back first entry, pull back second entry. There's your failed second entry short. Your confirmation of this trend line off the first two swings. It went lower, turns, and goes up. It is kind of right back into this resistance area. So, and it didn't quite close on its high. You could have just put a stop there since it went lower first. But what I recommend here is letting this break higher and then dropping a limit order to get in low enough to get out before it gets here, because it could touch there and turn back down. But generally, when it fails out the one side, it's going to at least push a little further through the other side. Look what happened. You didn't really have it all set up here, but this is a double bottom and you get the failure. Well, notice how this went a little higher than this one, even though it still turned back down. And that's generally what will happen, that this failure down here traps people, and a lot of them are going to put their stops just on the other side. So they'll tick it through there and then run back and trap them in long, because that's how everywhere you go and look, they teach you to go long if it breaks out this side and to go short if it breaks out here, where in essence you need to do just the opposite. And by letting it break out here and going long, you catch the low right there. And by not going long right here, you don't get trapped and then stopped out and then watch it go exactly where you thought it was going to go. So forget all that they teach, all that craziness. And there's a second entry long right there, but it's right into that, and we've already got a little double top and we've turned down there. So I don't recommend that one. You got to get in this one with enough room to get out before you get to that high. That's the key. You really could treat that like a breakout pullback long, but it's just too risky. You got to get in. You got to get in here or here. I'd rather see you risk this entry than this one, to be honest with you, because a lot of times what it'll do, what we just talked about, you go long up here at the high, it'll tick up and turn back down and stop you out and then go back. And if you caught either one of these, it's one of the trades of the day. But then you're working up. You still got this trend line. You don't want to go long here at the high of the day. There's a little bit of pullback to the trend line, but you don't want that. Now you get your break. You come back. You don't want to go short because it's the first break of this big, strong trend here. And another thing, too, is you wanted to be looking. There's your first leg up. It's got two legs in it, so you're looking for at least a measured moving. So we went a little bit further. And we are a good ways away from the EMA, but there's no break of this trend line. So don't risk that right there, because a lot of times what we'll do is tick lower and then turn back up enough to stop out all those stops and then go back down. And here it just kind of makes a double top, but you don't have a very good signal bar. That's definitely a doji. It closes right dab in the middle. That's very neutral. That's a one bar trading range, so that's a little trading range. So notice what it does. It breaks out, pulls back, and then goes lower. But you don't get a break higher yet. You don't get your failed second entry long till here. But look how it pushes through the EMA, pulls back, tests it on the other side, and look at that big bearish bar. It's a failed second entry long. That's where you want to go short. And a lot of times that will catch you a huge move down. But we end up bouncing where we previously had resistance. It ends up acting as support. And it does go lower, but you got to go long right into a double top, right into the EMA. I don't like that one. Then you get a failed second entry short right here. But look how big that bar is. Look at all that overlap. Just wait, and then look what happens. It tries to go lower again. And so now you got a little double failure. So if you can get in this one low enough to get out before you get here, I'm okay with that one. And it's really, to be honest, you really could go short right here, because now you've had a break of this and a new high, and that's a little failed breakout up there. So technically, and there's plenty of room to get out, so technically I should make that one red. I missed that one. I just didn't see it earlier for whatever reason. But I like that one. You don't want to take that second entry right there, counting off the high, because it's still overlapping. You would have been out of this one, but it's still into the EMA. But when it ticks higher again and you get that failed second entry long, just go short right there. And look at that thing go. And it's right into the 2 o'clock hour. It's not quite 2 o'clock, but that lets you ride this thing all the way down. And in 30 minutes later, 25 minutes later, and entry here would have been around 2042, and 10 points later, I mean, that's 10 points right there off that trade. So if you're using runners, by the way. So but great trading day. Not as many trades today, but the ones there were really good ones. And so I hope all that makes sense. But again, don't worry so much about the size of the chart or whether there's a tick chart or a volume chart. Just understand the reason we switched is because they changed the ticks, the way the CME changed the way they count the ticks. Well, they fixed that. So if you want to go back to the tick chart, you can trade a 2000 tick chart. If not, you can trade a 6500 volume. I can put them up here side by side, and you can't hardly tell them apart. Either one will work fine. There's some days there's not a whole lot of difference between the 6500 and 55, and even on the days there are, it's not enough to make any difference. It just depends on if you want to try to get some smaller bars so you can stick to the 2-point rule. So if I change, I'll let you know, and but it's still not that critical that you change. But I know some of you want to change when I change, so just so you can look at the same chart. But even then, they're not going to be the same, because tick charts and volume charts are not static, and they do not look the same at all times. Everybody's tick chart will be slightly different. Everybody's volume chart will be slightly different. Some of these trades will look great on my chart. Others will look better on your chart. And but in the end, it all works out in the wash. So anyway, that's enough for today. I'm going to wrap it up. I want to go home and watch the presidential debate tonight, so I want to get out of here. Hope you had a good trading day. Hope you're having a good week. We'll be back again to do it tomorrow, but I'm out here for today. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.